Good morning. As you're all aware, my name is Peter Wilson. I'm a transplanted Southlander who lived in Auckland for 12 years, and I love Auckland, and I still love it even though I don't live here necessarily all the time. A little bit about me. I was brought up on a sheep cattle farm down in the deep south, and I don't know whether it's my father's influence on me, but I've always seen that there's a better way of doing things. And I'll give you a small example. When I was 7, we had a vegetable garden, and it would be about 20 metres by about 30 metres, so it's more than your average sort of vegetable garden. But my mother got sick of getting in there with the spade and the shovel and everything like that as well, and I think my father got a little bit tired of hearing about it. So one day he got in there, brought the tractor in, took down the fence, which took about 5 minutes, did 2 rows with the tractor and the rotary hoe, drove the tractor back off, and the vegetable garden was done. That's kind of been a little bit of my... Some of you look a bit shocked. There was a few sort of tractor marks around the lawn, but some of that's been my philosophy with how I've operated as my business, as in most people would think, just get the spade out, get more people to do, get more people to dig, spend maybe 12 hours digging out the garden, whereas what we did in 25 minutes would have been achieved manually in 12 hours. And unfortunately, in my 19 years of experience of accounting, there are still accountants out there and still business operators out there using their spade, using their shovel, still digging, complaining about the bad back, complaining about all the pains and injuries they've had. And I would just sitting there going, why didn't you bring the tractor in? Xero operate what they call an online cloud version of accounting. Who has a smartphone in this audience today? Who's already signed up for Xero already, just so I know that I'm preaching to the converted? Okay. Who has the Xero app on their phone? Who knows that the Xero app has been upgraded recently? Okay, well, we're still getting hands up. That's pretty good. If you're a real sort of techno whiz, you can do a lot more things on your smartphone these days. You can operate and you can actually reconcile transactions off your Xero as well, not only just looking at it. I've not only worked in chartered accounting firms, but I've also worked for corporates as well. And for the privilege of a lovely 6-figure salary, my boss at any stage could say to me when I was their CFO, how much money's in the bank, how are our sales going, who owes us money, how much do we owe, and at any time I was supposed to have it on hand, and I generally did because that was my job. Every day I'd be doing the accounts. So for most of my clients, without them having to pay a 6-figure salary to me, clearly, they can still get that same privilege. And Xero has only been around for the last 4 or 5 years. And when I started my own practice a couple of years ago, I was looking for something like this because I didn't want to have to get out there with the spade and the shovel and have to dig things. And I would have to do the same thing. I mean, I've had so many times prior to Xero coming along where people have said to me, look, I need an overdraft for the bank, I need to get financials, I need to get my insurances reviewed. And they said, we need our accounts done. And we haven't done 2012. The bank want to see something more recent than that because it's almost 2013 now. A couple of months ago, a client said to me, look, I need to get an overdraft. We gave the bank 2012 and we gave them financials up to yesterday. And the bank were like, you serious? You're giving us financials like right now? And I'm like, yes. And so they're giving somersaults. By 3 o'clock that afternoon, the overdraft is approved. So just to give you an example of one here, Cooper Street Bakery, because they ate the food in-house, therefore it's 100% tax deductible. Bit of a free advice for you there. If you're going to have your coffees, have them at the office, don't go down the street. Things out there that seem a little bit obvious to me but aren't necessarily being ran by people when they run their business. My personal suggestions I say to people is when you turn up with your accountant and you're running your business and then you're running a whole lot of invoices that you paid for by cash. In my own business, to make my life simpler, I have a debit Visa card which I use for everything. And so at the end of the year, if everything is running through your bank account, then it's so much easier to reconcile at the end of the year. Try not to use your credit card because credit cards, I mean, you might get the frequent flyer points and all that sort of stuff as well. Credit cards aren't necessarily up to date. Come to the end of March, that transaction you put through on the 30th of March might not hit your credit card till about the 10th of April, and there is a risk that that might not fall into the right financial year that you paid for it. So when also coming up towards the end of the year, there are bills, if you have the cash flow ability, there are bills you can prepay in advance. You can pay some of your phone bills in advance, you can pay some of your rent a little bit in advance in order to get that tax deduction. I'm not saying you should do everything for tax, but there are some bills, and I've generally sent an email out to my clients around the end of March saying, look, if you have the option of paying a bill on the 30th of March or you have it paying it on the 2nd of April, pay it in March, because it's going to save you, that tax saving is going to be huge for you rather than waiting another year down the track. So if you're going to go and spend $500 on a Microsoft Office or whatever it is, you're better to buy that now. I mean, on the 1st of April, all of my clients who are on Xero, who are up to date, I can literally prepare their accounts for them. And if their bank feeds, so your bank feeds on a daily basis will be processed on the 31st of March. I can start on the 1st of April, I can start running your reports. I can give them to the bank. I can't give them to anyone else. The IRD aren't ready to process on the 2nd of April, unfortunately. They told me last year that I was trying to file returns and they said, oh, you've got to wait till about the end of the month or maybe sometime in May. But it is good to be really prepared, and the biggest thing for most people is they want to know how much tax they've paid. Some people, 2012 was a horrible year, so they paid no tax in advance, what we call provisional tax. 2013 is going great guns. And so they said, look, I'm having a really good year. I want to know how much tax they've got to pay. And they don't want to find out 6 months later when they could have saved themselves some interest. Likewise, if 2013 was a good year and 2012 was a good year and 2013 isn't, they say, look, I've paid all of this tax in advance. I want to know, do I need to, I've paid $50,000 provisional tax. I don't think that my business has made that much money. I want to get my money back from the IRD as soon as I can. And likewise, there are a lot of clients out there like that as well. So, just recently, one of my clients filed their taxes and got their $17,000 back, and they were pretty happy about that because their business is going well, but not as well as it was last year, so therefore their tax expectations were less. As registered tax agents, we do have filing percentages we have to keep up to and everything as well. So you do get an extension to the 31st of March generally, but it is important to keep everything filed up to date, otherwise the IRD start putting you on a separate list where you have to pay earlier and all those sort of things as well. From my experience, the clients that have struggled the most with sort of paying their taxes, their cash flows and all that have gone from being employees for a substantial amount of time to running their own businesses. And when you're an employee, if you get paid $5,000 a month, you spend it. It goes into your bank. They've already had the taxes paid on it, and you just spend it, and there's no letter from the IRD at the end of the year saying please pay your tax, because it's all taken care of. Your employer's deducted the tax, they've done all your ACC, your GST and everything. Then they run their own business, and all of a sudden they get $7,000 or $8,000 a month, and they go, whoa, that's exciting. And they spend it, and they spend it all. And then you turn around and someone like me, well in the past, says to them, oh, by the way, every 2 months you've got to hand over a couple of $1,000s for GST, and they're like, oh. And then at the end of the year you've got to pay $7,000 or $8,000 for tax. But they've already spent their money, so it is really a case of retraining them from an employee to a business owner, saying, look, you can't spend your GST, you can't spend what considered to be some of your tax. And even for most, most people who should know better, you'd still be surprised how many of them have said, $7,000 or $8,000, spend it all, because that's the past, and it's retraining them to get them back onto that focus. And just setting up a tax account, you should have a separate tax account where you start putting the money away. And I've got one client who was so nervous about paying her GST, every time they got a big invoice, so they might, and childcares and all that are a classic. The Ministry of Education will put $150,000 into their bank account, 3 or 4 times a year, and that's a lot of money to some childcares. And so one of my clients takes that GST amount and pays it straight to the IRD. And that way, at the end of the 2 months, when she pays her GST, she's already got the money there already. She's already paid most of it already. So it is really creating a system that will work for some people. Some people just take the GST, put it in a savings account. Some people deliberately take FPOS access off that savings account. So if they go into the mall and they want to spend, they can't spend their tax money. So it's really a case of creating a method that works for you, so that in order to, when those taxes come around, all the insurances, all the big bills you have to pay, it's not a big surprise. I'm not particularly happy about how easy it is to set up companies in New Zealand. But I'm pleased to say that every new client that I get, I do give them my little speech about putting money away for taxes. And yeah, as I said, it's not that easy. You've got to practice what you preach and everything as well. And the banks put pressure on you to, to keep everything up to date. So that's good. Business motor vehicles, how are we going for time? Are we 2 minutes? 2. Business motor vehicles is another thing that people say to me all the time. Should my business own it? Should I lease it? Should I have it in my own name? All those sort of things. I'm interested in cars. Most of my clients seem to be interested in cars in some way. There isn't a slam dunk answer, that's all I can say. There isn't a this is what you should always do. Most people I say to, the biggest factor in determining whether your company should own the car or not is how much the car cost. If you've got a Maserati, you might not want to have the company owning that. If you've got a $10,000 Honda Civic, then the company owning that is not such a bad idea. The issue is that the IRD still have this lovely thing called a fringe benefit tax, and for the first 5 years of you owning that motor vehicle, it's based on the price you paid. So if you bought a Maserati for $200,000, after 5 years it might be worth 40 if you're lucky. The IRD still sees that as a $200,000 vehicle, and they will still charge you what they call fringe benefit tax on a $200,000 vehicle. So my shortcut answer is, how much did you pay for the vehicle? How much do you use it for legitimately? And then it's kind of a step in, should you own it? Some of my clients presently own the vehicle in their own name and then use a logbook for their business usage, and then the company reimburses them for that.